Welcome to the Millennial and a Boomer Walk into a Coffee Bar podcast.
The very best podcast to get your life advice in the form of a grande caramel macchiato in a venti cup, 1/3 whole milk, 1/3 almond milk, 1/3 soy milk, double the amount of vanilla syrup, caramel wall in the cup, no caramel drizzle on top, upside down, of course, tall ice cup, whipped cream, rounded lid, one shot extra espresso, decaf, cinnamon sprinkled on the top, and for the name, that's David, spelled Dafydd, please.
Or to get your business, finance, and life support black coffee advice, I'm Dan, I'm a Boomer.
And I'm Chase, the Millennial. Thanks for joining us today.
Welcome back, Chase. We're on a roll with our financial discussion here. I hope people are getting some good things out of this because I think it's important to both millennials and to boomers that they really kind of be financially responsible. And if you're not, you can get there. There's ways to go ahead and to get back on top of your budget and to be, it's just healthy living, financial healthy living.
Yeah, I liked one of the things that was said on one of our previous episodes when we started the personal finance thing was even if you're in poor financial health now, doesn't mean you have to stay in poor financial health. You can improve and you can start that journey today.
And boy, what a great lead in, because a lot of, we've taught finance and budget and savings. A lot of it comes down to discipline. But I think today we're going to take a little bit of a more advanced topic on finances, and that's credit and credit score. And like I said, there's things you can do if you've got a good credit score. We'll go over that. Great, good for you. If you don't have such a great credit score, we've got some ideas to kind of help collect that. So if you're not in a great place with your finances, get there and listen to some of the things that are out here and search them out yourselves. But a credit score is a number, and typically that credit score is between 300 and 850. And that number reflects how responsible a person is with borrowing and repaying money. It's how much you can be relied upon. If I give you money, I'll get my money back.
Yes. This is going to be an interesting one because I think you and I this is where we're going to really part ways, I think, as we go through some of this. I think we have very different views on a credit score. So I'm excited to hear your thoughts, and we'll go through some of your pieces here. And then at the end, I'm going to jump in with, I don't know if it's a millennial thing or I don't know, but I have a very different view on some of these pieces. So I'm excited to dig in. This is going to be fun.
Yeah, this is great because your credit score is between 300 and 850. Boom, that's kind of a given. Yeah. Banks use this to decide the risk that they're willing to take to lend you money and what level of interest rate they're going to charge you. If you've got good credit, you'll get a good interest rate. If you've got bad credit, they want to make sure, hey, I'm taking a risk here. I'm going to make more money with you. So it's a number that shows your responsibleness to pay back. But the banks use it in two different ways. And that is, hey, will I give you a loan? And if I do, what interest rate will I charge you?
I'm with you so far. I agree that banks, they will use that for that. Yep.
Right. The higher your credit score, the easier it will for you to get a loan and the better interest rate that you will get. Or it's even used in credit cards. And, like them or love them or hate them, credit cards have a role in the society today, unfortunately, but that's why your credit score is easy. So there's a way that the banks calculate this, and the banks typically own us when it comes to a lot of this. It may not be reflective, but over the general population it is how long you've had credit accounts like credit cards, student loans, car loans, things like that. That's one of the indicators that goes into your credit score. How much money you owe, whether you owe 10,000 or 300,000, that's a big deal, and that will play into your calculation of your credit score. Whether you make your payments on time, if you don't pay back the money that has been loaned to you on time, your credit score is immediately going to drop. And then this last one is an important one if you've ever filed for bankruptcy. And even if you have, it will reflect poorly in your credit score, but there's things you can do about improving, even if you've had to file bankruptcy. So are you following me so far?
Yes, I think that all makes sense. Now, there are probably some questions that I would raise here in that, do you need some of these things? For instance, I'm the educator guy and I always get a lot of flack for this, but my question is going to be, should you take out student loans? Well, that's not really a credit score question, but the point is you probably don't need a student loan, even though it might help your credit score. And so where I'm going to push back is you don't need to do some of these things that would improve your credit score. It would be better for you to not be $200,000 in debt and instead to take a route that gets you your degree a lot cheaper. Another episode, another time. Just wanted to call out that just because it helps doesn't mean it's something you need to do.
Right. You know, what's interesting, when I was a young lad and I was leaving the nest of my mother and father, my dad pulled me aside and said, you need to get a credit card, son. And I'm like, why? I don't need a credit card. He says, no, you need credit. You don't need a credit card. You need credit. And I started thinking about that and thought, wow, that I have kind of a mentality that if I've got money on a credit card, I'm going to go buy something. So there was a local clothing store that offered what's called a student credit card. And I think the maximum limit was $100 at the time. And it was all to help you develop credit. So I got this credit card, and my dad says, now go buy something. I'm like, I don't need something. He said, go buy something. I don't need something. He said, go buy something. I went and bought something. And he said, now pay it back. Right now, go pay it back. And so it was all in this game of establishing credit. You don't need credit cards, but you do need credit in this world. Talk to me about that.
Well, I disagree with you. I don't think you need credit. But before I jump into my little diatribe of why I don't think you need credit, let's go through, because there are some meanings to the different levels of your credit score. Let's finish getting through the score piece, and then I'll come back to, I think it's a bigger question than just what does credit do and how does it work in my credit score and yada yada. I'm going to take this and tackle it from a higher level, I think.
Okay, so there's meanings to your scores, and we'll break it down into a couple of ranges. 300, which is the lowest, to 579. That's poor credit. It will be extremely difficult to get approved for a loan or a credit card. And even if you did, it would be an exorbitantly high interest rate for the money. So 300 to 579, poor credit. 580.
Oh, hold on. On that point, I want to make something really clear. It would be better for you to have zero credit score than to have a poor credit score.
Point taken. I totally agree with that. This means that you've had credit and you've watched that credit. You have proven yourself.
Screwed something up royally.
Exactly. You've proved yourself. Remember when we came back here and I said the definition is that it reflects how responsible a person is with paying back borrowed money. If you have a 300 to 579, you've totally blown that, right? You've demonstrated you're a poor manager of money. I'm not saying that there's something you cannot do about it. I'm saying you've demonstrated that. So 580 to 669, it's fair. You might get approved for some credit cards and some loans, but you're not going to get the very best interest rate, and you're going to be considered still a high risk. So bad credit is a bad thing. Fair credit is one step up in probably managing your ability to pay back loans and get into good, but it's still pretty rough when you're coming to getting a loan or credit card.
Agreed.
679 to 739, that 670 to 739 is good credit. You should be able to get approved for most loans, credit cards, and you should get a relatively good interest rate. A lot of people reside in this high 600s to mid 700s, maybe even a little bit of the higher 700, 740 to 799. If you're mid sevens to the top of 700, that's very good credit. You'll have an even easier time to get approved for loans and credit cards, and you'll get some of the best interest rates out there. This is where the majority of people reside, I think, is the 700s, the high. But if you can get your credit to 800s to 850, it's excellent credit. You'll have no problem getting approved for a loan and credit cards, and you'll actually get the best interest rates available. So I do want to say this: credit score is important when applying for loans or credit cards, because it determines if you qualify for a loan, but also determines the interest rate or how much you have to pay back for that loan. Now, I know you have a little bit of angst about credit score, and maybe you want to intervene now, because I'm about ready to jump into why a credit score matters, other than just the simple fact of getting a credit card or getting a loan.
Yeah, well, I found something interesting. While you were reading those numbers, I had a thought, what is the average American credit score? And so I looked it up, and the average credit score in the United States in 2024, March of 2024, was 705. So the average American is falling in good, not very good, not excellent, not poor, but they're good, right? That's
right.
Roughly
Okay.
where you want to be. With that said, let's go through the important impacts of the credit score, and I'll talk about some of these. I think this is where I'm going to start.
Okay,
engaging
good.
on these.
So I remember I said it's if you qualify for a loan and what interest rate you're going to get for a loan. But here's some intangible things that are not having to borrow money, and you have to have a good credit score that will reflect in how you do some of the everyday things. Landlords check to decide whether to rent you an apartment or not. They can go look at your credit score and say, hey, you're not borrowing anything, you're not getting in debt or anything else other than I got to pay my monthly rent. And they may not rent you an apartment if you have a low credit score, simply because it's reflective of the ability for you to pay what you say you owe, right? Without even a loan or without credit, it comes in, and that's important. That a landlord might just say, no, you're too big of a risk.
And that happens all the time.
Yep.
I think it's important to call out. They check them for a reason, and they make decisions based off of them.
Because it's representative of a person's ability to pay, right? So, okay, I've had this with several employers. They check your credit score as part of a background check. Typically, if you're working in a job, and I'd say as a business, you should do a background check on your employees to make sure. But employers look at that and say, how responsible is this person? Whether you're borrowing money or getting into a credit, if you have a bad credit score, it could be negatively received or perceived as a result of your employer.
And I think it's another important piece to call out here. The higher you climb the ladder of whether it's a corporate ladder or within some organization, the more likely that is going to play positively or negatively in you getting that promotion or new job.
Yep.
They're not checking the entry level positions for credit score because you're only making, $10, $15, $20 an hour. But when you're up there and you're making business decisions for that company that could be $1 million deal, they want to know before they give you the opportunity to mess around with $1 million, can this guy handle his $50, $60, $70,000 personal paycheck in an effective way?
Very good. And then here's one other one that I was looking at, and this has happened to me quite often, is the utilities. When you go and you rent a home or you go to buy a home and you say, hey, I need to sign up for utilities, they'll say, okay, great. I can provide service at that address, but they'll go check your credit score to decide whether they will hook up your utilities and require that you pay a deposit, or whether they'll just let you sign up for the service and continue to pay for the use of your utilities. So it's very, very important. When I was in college, I had rare to none. I went in there and they charged me at the time a $75 or $100 deposit just to sign up to get the utilities hooked up to my apartment.
All right. So in the words of the famous or infamous Lee Corso from Saturday Morning College Football, whatever that show's called.
Oh yeah, I
College
trust
Game
him
Day.
for my financial advice.
In the words of Lee Corso, not so fast. I would say that everything you just mentioned is true if you're living in the culture in which we reside in America today. But that doesn't mean that culture is correct. Because let's say you walk into the car dealership and you pick out the pretty little red vehicle sitting on the showroom floor and say, I want to buy that car. And what does the dude say? He's like, okay, cool. Let's go do a credit check. But if you're living in a way that is living debt free, this is against culture now. This is hugely against culture because everyone just finances their car. But you say, oh, you don't actually need to run that credit check. I'm going to pay cash for this vehicle. Now credit does not matter because I'm paying with cash. Let me push back on the house as well. And I know this is out of reach for most Americans, but when we've sold multiple homes, and one house that we sold, we had in the first 48 hours 10 offers. 5 of them were all cash offers. You know what I did? I didn't even consider the other 5 guys. The 5 guys that were paying cash were the ones that I was going to focus on because that's a lot quicker and easier to take care of. And I've been on both sides of that, buying with a mortgage and buying with cash. But let's talk about it for a second. Buying a home, you actually don't have to have a credit score to buy a home and to get a mortgage. And this is something that a lot of people don't know or don't understand is that, yes, it's different, right? You're going to have to look for a different mortgage company, but some mortgage companies use a process called manual underwriting. And sometimes they use non-traditional credit or no credit score lending. So do you have to have it? No, there are ways that you can get a mortgage without credit score. Now, I understand what you're saying, and it makes sense, and you'll probably get a better rate if you have credit. But just go out and blanketly say you have to have a credit score. I don't know. You can also rent an apartment. There are, let's see here. There are complexes, and they will provide an alternate route where you are required to pay your first and your last month's rent. You still have to have proof of being a good renter, that you've made payments to a previous place, and there's different ways to show that. On-time utility payments is one of those, and I know you use that as an example as well. But then you'll just pay an extra security deposit. You say, well, now I'm paying more money. Are you though? Because you didn't pay, essentially, if you're poor with money, you didn't pay all that interest on the loans and credit that you had before. So, we could do a little math here, but I don't know. I would push back and say, if we're going to live a debt-free life, which should be the goal, I'm not 100% sure that we need to go build a credit score when you could get through life without it. I'm going to give one last example here. And this is a very millennial perspective. You don't have to go and buy the 5-bedroom, 4-bath, 2-car garage house and be house poor. We talked about that on a previous episode.
Yeah.
And especially the day in which we live, where tiny houses are a thing. If I could go back right now, I would not go and buy a full house right out of college. I wouldn't do it. I would go build myself a tiny house and pay cash for that thing, and then start saving for a better down payment. And the whole funding situation changes when you have that 20% down payment for a better house. Wildly different. When you hit that 20%, you're no longer paying PMI, you've got all these other things. And when you put 20% down, the underwriters have a very different way of looking at your experience as opposed to someone who's like, oh, I'm going to put down 1% and have be house poor. These are wildly different scenarios. And so I would incrementally build up as opposed to just going and getting a house. That's me personally. And you can absolutely do that with 0 debt.
Wow. Okay. So now let's step into the real world here. If are listening and saying, wow, I don't need credit. I can just go build my own thing and pay cash for a house or build a little house. I'm totally for it. I think credit has destroyed more people than anything else, and it's unnecessary. It is completely unnecessary. But I think in today's world, in today's environment, I think it's a necessity now to build your credit. Unfortunately, maybe I'm delusional, but I like where you're going in the utopia. and the perfect world. I just don't think it's for the average boomer or for the average millennial or Generation X. You know what I mean? I love it. I love it. I just don't think it's. I don't
yeah, I mean,
think.
I think you're coming from the world that boomers have built, is that you've made it a requirement, but I don't think it has to be. And that's my point, is there's no reason that you have to keep up with the Joneses.
Yeah.
You know, you do not have to live in the best neighborhood in the best city. You could absolutely move 20 minutes further outside of town. And you remember I did that. We lived right off the freeway and we moved 20 minutes further north. And I went from a townhouse to a 5-bedroom, 4-bath house that was out in the country.
Right. You did.
And my mortgage was exactly the same. And so my point is, think bigger. And by thinking bigger, I mean think smaller. You don't have to go buy the brand new red Corvette. You need to go buy, what are those? A Dodge Dart, you know, something that's going to get you there until you can afford it and when you can pay cash for it.
I love it. And for the millennials out there, I'd say this: change the world. Do something about the situation that the boomers have created. You said that of your own fruition, that the boomers have created this mess with credit. I think in some instances we have. Go do something about it, millennials, and don't make it dependent on that. But for now, because we're talking to the masses of the people that do have to deal with credit, there's ways to raise your credit score. And the simple thing is, pay your bills on time, whether you have credit or not, whether you're paying for your monthly cell phone, your monthly anything. Pay your bills on time. And then the second one is keep your credit utilization very low. And I think this is where you're coming from, is if you have a credit card and the balance on that credit card is $500 and your limit on that credit card is $1,000, your credit utilization is 50%. Whatever you do, keep your credit card utilization low. And preferably, if you're going to charge something on credit, pay for it at the end of the month. Therefore, you're not using credit. You're using it as a means to make your payments. And so whether it's percent of the credit card used or whether you're paying it off every month, we use our credit card for gas, right? I don't want to walk in and pay cash or cash in pennies. But we always pay it off at the end of the month. If I didn't have a good credit score, I wouldn't get that credit card and I would be walking out there with cash. Should it be that way? Absolutely. Cash should be king in this society, but it's not.
Yeah, I think that's a great point. And I want to call something out for me personally. I have a credit card. I actually have 2 credit cards. I have a personal credit card and I have a business credit card. And I will tell you this, 100% of the time, both of them have a 0 balance by the end of the month.
Yeah.
So it's not that I'm against credit, but I think that we have an over-reliance on credit to live a lifestyle that we absolutely don't need. So yes, keep your credit utilization low. It should be more of an emergency thing from a personal perspective, and from a business perspective, it does offer protections that you don't have otherwise. And so I understand that, right? I travel a lot. My credit card gives me insurance for the rental cars that I have. And now I'm not paying more for that. I travel a lot. I get some benefits for the traveling from that credit card. But 100% of the time, it's paid off at the end of the month. Okay, so that's it. Keep credit utilization low. And next, you have on here, monitor your credit report. What does that actually mean?
And, and it kind of goes hand in hand with what is my credit? We say these numbers, and you can go out and your credit card usually will tell you what your credit score is. You can get free credit check websites, or you can buy it from the big 3, the Experian, Equifax, or TransUnion. Or you can request a free copy of your credit report from those guys at least once a year, and they're obligated to give you that. But check your credit score. Periodically check your credit sheet and make sure that, hey, they say, oh, you didn't make this payment back. Well, I didn't even have a loan there. I didn't have a credit card there. Mistakes do happen that can negatively affect your credit. So just stay tuned, check into it, find out what your credit is, and then periodically, I say once a year, at least check to make sure that your credit reporting is accurate and right.
And what you're finding a lot of times is that someone will have opened a loan or credit under your name and with your social security number or whatever, and that's impacting you because someone else has stolen your identity. And so that's a good way to verify that your identity hasn't been stolen and used to open up more credit. All right, so that makes sense. So talk to us about building a longer credit history then.
Well, how long you've been using your credit cards is important. The longer, the better. And, they do go back and look at your credit history. And unfortunately, you could have some early in your time that poor credit, but the longer the better that you've been managing your credit. It actually builds for you to get a better credit score, applications for loans and things like that. And so they say don't close any accounts, even if you've not used them for a while. Now, I have mixed emotions about this. I've kept some credit cards for a long time, years and years and years, that we've never used them because they can actually also see if you've used it or not. My problem is today's identity theft. If you have an open account and someone finds out, you don't monitor it very often and you never use it, all of a sudden you could get those charged. But so I'm mixed on the fence on that thing. I don't think you need to have multiple credit cards, even if you don't use them. I just think you should have one or two with a long history of using them and paying them off.
There's one other area that I think you actually should close a credit card. There's two types of credit cards in the world. The ones that you sign up for through your bank or credit union, and they're free to you. If you don't put anything on them, you don't pay anything. And then there's this other thing that's a millennial thing by far, where you pay for a credit card, an annual fee, but then you get some of those things back in return. So you actually get benefits from it. But if you have one where you're paying and not using it, or you're paying for it and not using those perks, you should 100% close that down. That's costing you money and you're not getting anything for it. So I get what you're saying, but there are times that I say absolutely go close that puppy down and save your $99 up to, I've seen some for $699 a year that people are paying for.
And maybe you and I differ a little bit on this one. I would never pay 1 penny for a credit card. If you actually, they say, oh no, come buy my airline credit card and you'll get miles. If you were to do the math, it'd be cheaper if you just not do that and go fly and pay your own bills. Oh yeah, you get 2% back. Well, you're paying 27% or 18% or 15%, and you get money back. I just really think that you shouldn't pay anybody to let them use their money. So you pay them dearly. Anyway, and then here's another one. I don't know. Do you get credit card applications in the mail quite often?
Every
or
day,
email or email. Hey, come get our credit card. Don't apply for a credit card every time you get a new application. Every time they check your credit takes a small hit. Be selective, use the ones that you need, hold on to them for a long time, and don't abuse that.
Yeah. And this is, again, a millennial thing. It's called travel hacking. And these people are signing up for like 10 different travel credit cards in order to get the points and miles and all this ridiculousness. And while it might work short term, long term, you're going to have a ton of accounts open. You're going to be open to a ton of risk. And it does impact your credit score.
Yep. So good. So real quick, what factors lower your credit score? And we can go through these pretty quickly, but missing a payment, if you borrowed money and you miss a payment, a hit on your credit score. Having too much debt, the debt to income ratio, if you're using too much credit compared to your credit limit, that takes a hit on your credit score. Applying for too many credit cards or loans, every time you apply, they check your credit. If some organization sees that your credit's been checked 12 times in the last month, they're going to start to say, wow, what is going on here? Either the person's shopping around for a credit card or it's just trying to get in more debt. The defaulting on a loan, even if it's not a credit card, if it's a home equity or a car loan and you don't pay your bills, Having short credit history, there's not enough history to prove that you're financially responsible. And then the last one, bankruptcy. If you file for bankruptcy, it will significantly damage your credit score, and it stays on your credit report for up to 10 years. So be responsible with your money and pay back your loans, and don't get too much credit history or credit application for credit cards, but don't use too much of your credit, which is a bad thing to do, to show I max out this card, I max out this card. All of this stuff is going to take a hit on your credit score.
Yeah, and it will. There's no doubt about that. What I want to do as we end, I'm going to take us back to how life should be, not how life is, and talk about the benefits of living without credit. There's a couple of things here. I would say first and foremost, the first benefit, you are no longer enslaved to a life of debt.
Agreed.
Right? We have a Bible verse that talks about the borrower being subject to the lender. You're literally enslaved to debt. And we talked in our previous episode the difference between good debt, bad debt. If you're putting something like a car, you're being indebted to buy a car, you're buying the wrong car. I would say that's a very unorthodox thing to say in 2024, because everyone has car payments and they're incredibly expensive, up to $1,000 a month for some trucks these days. That's crazy town. Unless you can afford to pay cash, I would say you probably should buy a different car.
Yep.
But first, you're no longer slave to debt. Second, your bank account becomes your measuring tool. I would say there's one thing you could call a FICO score. That's the thing you were talking about. That's just another name for I love debt score. Businesses, banks, even the government use this number to analyze your past. We just talked about all this, but that doesn't care about how much money you make or how much you've saved, right? You could inherit $1 million tomorrow and it will not change your credit score by 1 point. So you can use your bank account to be your measuring tool to actually show wealth. FICO scores if you can handle debt. Your bank account shows if you're actually building wealth. And then third, you're in complete control of your finances. You said it just a few minutes ago. Cash is king, baby. When you start to make those big purchases and you pay for them in cash, your credit score is really worthless. It doesn't help because you're paying cash, so no one's even looking at it. I know you and I are going to disagree on that point, but it puts you in control of your finances.
Right.
Fourth, you're less likely to overspend. I don't know for you. For me, it's a mental thing. If I have to whip my wallet out and hand someone a bill, like physical cash, I really stop and like, do I really need
Exactly.
the venti caramel frappuccino,
totally
or can I just pay the $3 for a black cup of coffee? You know what I mean? Like it mentally it changes. So it's less likely to overspend when you're living on a budget. And if you have that emergency fund and, oh no, my air conditioner went out. If I'm paying cash for a new air conditioner out of my emergency fund, I'm not buying the biggest, best behemoth. I'm like, give me the air conditioner that'll cool my house down, and that's it. I don't want any of your extra frills or thrills. And then fifth, and we're going to get into this in a future episode on personal finance, but you'll build wealth and give generously. And that's really the whole point of personal finance, in my estimation, is I want to build wealth and I want to be helpful to other people around me. I want to give to causes I care about, to our, different people. I want to be able to help someone. When I see someone at a gas station and they're counting out their coins and $3 on the hood of their car to go pay for gas, I want to be the guy that when they go pay their $3 in gas, I just swipe my card and fill their car up with gas. Like that's something that's important to me. I want to be able to be helpful to people, and having wealth, your credit score doesn't matter in that instance. So anyway, I think that's about it. I'll give you a chance to respond, and then we'll wrap this bad boy up.
The difference between a millennial and a boomer is the boomer sees the world as it is. A millennial sees the world as it should be. And I tell you, it's different. I'm going to challenge all the millennials and the boomers to comment on this episode of where you see this going, because we've set two varying different applications. Millennials change the world. Boomers change the way that we have created the world and be supportive of that. and pay it behind. If someone's in the waiting line at the local fast food restaurant, pay for their bill. Do something for someone to help them along, because we are different. And just because we're different
doesn't make us wrong.
That's right. Have a good day.